Welcome back. Hope you're having a good morning. Well, we told you all the stocks that you need to track. Let's get some fundamental analysis going on some of them. Siddhartha Khemka, the head retail research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Morning. Good to see you in as always. Well, Sid, we have a couple of management joining from the real estate sector later on the show. What's your take as a brokerage house? What do you all have coverage on? I think you all initiated coverage as well on a couple of real estate stocks. So tell us more. What's the preference out there?
Yeah, very good morning, Nigel. If you look at the real estate sector as a whole, we are witnessing a strong uptick in demand. And based on various industry reports, the top 7 cities and the top 9 cities, they have been recording decadal high sales in terms of units. We have also seen a sharp surge, especially in the premium segment or the luxury segment of the residential market. And you would have heard news flows of how new launches in the premium and luxury segment have been lapped up within days of their launch. So that makes us very positive on the overall sector. And minded, this demand uptick has happened in an environment where the interest rates cycle has peaked out. Now from here, if any correction in the interest rates, cut in the interest rates in the coming year, will only boost the demand for the real estate pack. In that space, there are some certain micro markets that we are very positive on. For example, the Mumbai region is something that we are very positive with the strong demand and a controlled supply that has helped retain prices. With raw material prices being under control, margins have been pretty good. And within that space, we like a Godrej Properties, which is a preferred pick, followed by Lodha. And we recently initiated coverage on another Mumbai-based real estate player called Sunteck Realty. It is one of the leading players in the Mumbai metropolitan region. It has a luxury presence across price points with a proven execution track record. And to look at it, if you look at some of these new projects, 3 of its new projects launches have resulted in 22% pre-sale CAGR during the last 3-4 years. And we expect this strong momentum to continue. We are expecting 25% CAGR over the next 2-3 years, with the company gearing up for 2-3 more new launches. We are also expecting strong balance sheet, debt to equity of just 0.1x, robust cash flows, cumulative operating cash flows of 16 billion over the next 3 years. Hence, we believe that stock should also do well. We have a target price of 640 on Sunteck, which is a decent upside from current levels.
Okay. Siddharth, hi, good morning, and thanks for joining in. I wanted your thoughts on some of these Indian exchanges, right? Like BSE, for example. There's a brokerage report from Jefferies this morning where they've initiated buy and they have a big target price, 2,700. And they talk about how financialization of savings is leading to a big, move towards BSE. But the stock has rallied substantially this year already. Do you see further upsides?
Sonia, so I would say that, yes, BSE is something that we cover. We like the stock. The company has definitely benefited from the retailization as well as financialization of savings. But one key point that has helped BSE in the last couple of months is the launch of the weekly expiry Sensex on Friday and BankX on Mondays. With the Sensex expiry on Fridays, BSE has now about 7 to 8% market share in the F&O segment, where it was almost not present some few months back itself. So that gives a good growth for entry into a good growth segment, the index options market for BSE, which is driving the share price. So after this run-up, we have a target price of 2250, which gives very little upside or room for upside from current levels. But as I said, the business model is very good. The entry into the index options market will further drive growth. They already have key strengths in the mutual fund, the MF Star platform that they have, and some of the other segments where they are definitely doing very good.
Okay, so that seems like a stock which has been on steroids, although it did come off. From 2,500 levels, it's come off a little bit over the last few trading days or so. Just a quick word on Cipla, Siddharth. If you have looked at it, a big price damage. But if you are reading through a lot of what analysts are saying, there is real earnings risk as well, which is materializing, and lots of earnings cuts, price targets being brought lower. Any thoughts on this one?
Yeah, Prashant, so I think that is definitely negative, the warning letter for the Pithampur facility and the kind of the warning that has come. It highlights issues related to the inadequate investigation related to market compliance for its products, documentation and field alert reward violation. So these are things which definitely creates a negative sentiment for the market. However, if you look at the company has been saying that they have been filing products from some of the other plants, definitely there is a risk to the earnings estimate from especially from these plants and the certain products that they have been producing from this facility, which will take some time for them to shift to other plants. And there is as I said, there's a negative sentiment around the kind of the warning letter that has come. So we had been positive about it, but I think with this warning letter, there is some estimates cut from our side as well. And we'll need to see how the company responds to these issues that has been raised by US FDA.
Okay. But, I wanted your thoughts on the Tata Tech IPO that Anuj was talking about. Very strong subscription, but the bigger story perhaps is post-listing, right? I mean, the expectation is that, the strength in the business is something that could continue. It's in a growing space as well, the electric vehicle space. Is this a stock that you would buy post-listing?
Sonia, yeah, so I think if you look at the business model, definitely it's a pure play ERD space where we have seen a lot of interest in the existing stocks in the market as well. And with the kind of valuation they came with the IPO, I think the kind of oversubscription had to be there. And to add to it, a Tata IPO after 19 years. So the stars were aligned for this IPO to see the kind of oversubscription. And you have these flows which you and Anuj just talked about. So I think, yes, definitely we are positive. But with the listing, post-listing, the business model definitely doesn't change. Valuation is something that one needs to be cognizant about. And there will be opportunities in the market to get in the stock at the right valuations because the growth is pretty strong. It's placed in the EV segment, which is at the sunrise sector, which will see a lot of growth. So definitely a positive view, but as I said, one definitely needs to be cognizant at the valuation at one gets into the stock.
Sid, what about the auto space? There's plenty of excitement out there. We'll be getting the auto sales numbers as well by the end of this week. How are you all viewing that pocket and what's the preference out there?
Yeah, Nigel. So I think auto has been one sector which has been buzzing a lot, even in the quarterly results. Two sectors that clearly came out with strong numbers: A, the banking BFSI space, and two, the automobile space. So there we have seen news flows about the strong festive demand this time around, right from the two-wheelers to the passenger vehicles. So I think we believe that the demand would continue. Supply chain issues have been resolved. Costs have come down, and that is one big factor which has helped improve margins and report stronger earnings growth for auto stocks. Going forward, what we believe that we are witnessing a strong demand, especially in the two-wheeler segment, wherein we anticipate high growth, and that is where we are changing our preference from passenger vehicles, which was our preferred segment within the auto space, to now two-wheelers being our preferred space within the automobiles, followed by MHCVs. Passenger vehicles are showing signs of growth moderating while the mix continues to improve. Mix towards SUVs have increased, and that has led to stronger growth as well as margins. But if you look at, as I said, within the two-wheeler space, we like Hero Moto. The company reported very strong, its highest ever festive sales of over 14 lakh two-wheelers during the 32-day festive period, start of the Navratri and end of Diwali. The company is also looking at premium segment production for the Harley Davidson and the Charisma, which is in the premium segment. And the number of outlets have also currently is at 200. for the premium segment, and it targets 500 outlets. So we'll see a strong growth. But in the core business, Hero continues to do well, has seen good demand in the festive season. Now that marriage season is starting up, we expect demand for Hero Motor in the marriage season would also be pretty strong. And hence, I think that is one stock which can do really well within the two-wheeler space. We have a target price of 3850, about 15% upside from current levels.